What up, y'all? What's good? It's your boy B-Phil. We back again for 1923, 6:32 a.m. MST. All right, y'all. So, as you can see, like my new strategy, yeah, it was AI generated. Artificial intelligence, machine learning, ChatGPT. All right, I'm kidding. So, let's go ahead and just kick off the beginning of this week with, well, not the beginning, this is Wednesday. What am I talking about? Let's just start from the top and start generating some ideas. So, we're looking here at the NASDAQ, and it seems that the NASDAQ is currently at 12,997 points and fluctuating consistently. On the daily, we saw a breakup, of course, right here on the 16th of March. Right, we saw this large candle move up, right? We saw it continue up, pull back ever so slightly, and we continued up over the next 3 days, which were the 29th, the 30th, and the 31st. Now we've just been moving sideways in the range, what it looks like. Now, if we continue to go down, so we're going to go ahead and look left and see what's happening, right? So the idea here would be that, okay, well, we want to see price move back into this area, right? Because if we say this was sideways and on a lower time frame, this is actual candlestick structure. We saw it come down, we saw it break above, and then we saw price just continue up from this area here, right? So this entire zone will be considered unmitigated at this point. So what will we do? Well, we go and first turn on our magnet and size this box. Let's move it in a bit. And we would expect buys off of this particular zone to go higher. And that's all we're really looking for at this point, right? So we can continue to go down with the newfound knowledge that we want to come down here somewhere. We're going to go down to the 4 hour. We're going to refine this area. Now, why did I pick that? Well, you see price comes down and then finally blows up to the moon, right? 4, 8, 12, 16, right? 20, 24. So this is the last day right here, right? 4 hours each, right? 8 candles, excuse me, 6 candles, because that equals 24 hours, right? And you see it blow up. But when you see here, you know, you see that it taps into the open, but then it continues on up. So I would reconcile that. We want to see price come back down here, test this area before continuing higher. Now we're seeing price is coming up, breaks up, right? Have it break down here, right? And so I'm going to show you everything, right? Comes down, and then it breaks above this high here. Then it finally breaks a low. Boom, right, from here. Now, it breaks this low here. Now, we would say, well, as we were coming down to break this low, where was that high at that we were coming from? Now, you could say here, but in the candlestick, when you look on lower candlestick structure, you could use something like this as well. When you see it breaks above here, right, boom, it breaks there, right? Now we're going to say, well, where did that low come from? Or where did this high come from, right? You could argue here or here as we just came from there, right? But we still see it come back down here, and we see price break up again, right? It first breaks here, right? Breaks here, pulls back, breaks up again, and now we're starting to see it come back right here, right? So now we want to see something like this, right? To ultimately fit in what we expect to see in the market, which is higher prices. So the idea here would be, let's go ahead and remove that. We see this is starting to wick down. So let's go on a lower time frame and let's just continue to play off this particular bias here. Now, do we really want to see it come all the way down here? Now we could continue to refine. Then we have a much larger area. All right, breaks up, and you just have a lot of area for it to run. So if we're looking here on price action, let me me turn this down just a tad bit more. Looking here on price action, we see this break, right? It's breaking this candle, where they come from somewhere down in here, pulls back, right? Breaks above. So if it breaks above here, this area here is valid for buys ultimately, but we already have a bias where we want to see price pull back before going higher. So if I'm short here in the short term, then I'm looking for shorts. So we see price wick down here, right? Now, is that actual break? No, we want to see a body, but with that expectation, if we did see that close, we'd want to see a short. Bam, potentially for somewhere in there. I mean, you look at price, breaks down. Actually, you probably would want to see a short from somewhere like this in this area. So if we continue to go down and look for refinements, we see that price actually opened, it fell off from here. So we could use something like that. But ultimately, you saw price come back in and mitigate it. So you see this, and we'd probably be looking for something like that on the 1 hour, because then you continue to follow price, drips off. So I want to see it come like in this area before I look to take a trade. And we'll leave this bias here, right? And we'll see what happens. Now we could, no, we'll just see what happens, right? Let's put it that way. Boom, supply zone. All right, let's go on the euro and see what's going on. So we have some expectations. Don't mind these trades. These trades are tests of different indicators that I'm developing right now. You feel me? All right, so we had price come down here to where we wanted it to come to. Looks like it's starting to absorb. Absorb, starts to come higher. Doesn't quite make it here to break, but we ultimately want to see higher prices here, right? So at this point, I consider this invalid because now we've tapped into what we're looking for, which is this demand zone here. And this demand zone is, of course, at the $1.09 and 16 pips to $1.09 and 30 pips. So ultimately, what are we looking for? Well, we're looking for a reaccumulation here. And as you can see, we have price breaking above once, right? So if we follow price action, you have these candlesticks in here. It looks like you have this breakdown, potentially up. Ultimately, we still are in this range right here, right? We haven't seen a break yet of this long move down. So really, we just want to stay out of the market and wait at this point. So I'm gonna wait until it becomes clear to me. That isn't particularly clear to me, unfortunately. Excuse me, fortunately, because we always want it to be clear. We always want it to be clear, and we always want to take the trades that we expect based on the testing that we've done, right? All right, let's go to gold and see what's going on here. So on the daily, we see it break up, but don't break the heart, right? Break up, but don't break her heart for sure. So you see a break up here. Now you're starting to see a breakdown. So let's go ahead and remove the drawings here. Now, if we're trading strictly the larger MBs here, we could see this as one, right? Because it finally breaks up, and then we're looking for last unmitigated zone inside of this mint block. We have MB here as well. Could say that. And you could actually say you have MB here as well. But then, of course, we're starting to see it's wicking down. We have a nice body here. So we say break down, right? Break down. And look for the retest here. Again, this is candlestick structure, intermediate on the lower time frames. You would be able to see that this is indeed a larger move, and you see this breakdown here, and then you see that, okay, well, there's an area here to come back and then fall off, if that's what we're ultimately expecting, which the larger moves in the market were bam and an up, right? So when we're looking in this area, we're like, okay, well, where's the last down move for that move that's unmitigated, right? So we could look here, we say, okay, some we're willing to trade off of, potentially. Then we continue to go down. We should start from the bottom though, right? Because you see this open here. It mitigates the open and then it takes off. So can we expect from here as well? And we have striped pajamas. So I would actually say I would use this down here, and then I would use this to go ahead and trade off of or short off of in the short term. So then we zoom in. Right, let's go ahead and label this. Let's go, let's do that. Daily candlestick MB. Let's put this, let's go bottom. Yeah, that's fine. So let's go ahead and save this template. Save as MB label. Right? So then we want to just go ahead and use MB label. And then we do this here. And we want to say daily major swing here. So daily structure MB. Great. So now we want to go ahead and label this S&D right here, right? So we'll say, and this is just to be verbose, right? We can start to define and start seeing these patterns. So we'll say daily S&D. Right, so great. Now we have these areas. Now we have this breakdown. We know this is a daily. Now we can look in here for refinements. So we look in here and we're saying, okay, well, this candlestick mitigated the open pretty much. And we want to see price potentially come back in here, right, to go ahead and trade off. And this is a 3-hour zone here. So what do? Well, again, we go that label. And we want to say S&D redis. Right? We just keep continuing down. And we really just start to see, okay, well, we have a 3-hour here, but then we have potentially a 1-hour, because you can refine this. You say this is, actually when I'm looking at this is probably where I would look now, like right here. And we'll make this a little bit shorter. We'll put a label on here, and we'll call this the 1 hour. Right? So now we're just getting confluence on the different candlesticks that look unmitigated in these particular time frames. So we have the daily S&D, then we have a 3-hour S&D looking for a redistribution in that zone. Then we have a 1-hour S&D looking for a redistribution in this zone as well. So what do? Well, let's go ahead and put this here. And again, this is all just added confluence that price is going to go in the direction that your data prior has told you that it probably wants to go in, right? Based on your voracious ability to back test trading strategies. Okay, so that's gold. That's what we'll look at. We'll wait for price to come back up into that area, and we'll leave it be. Now let's go ahead and go here. Let's see what happened on GJ. We're good off that. It's great. Again, we saw this Wednesday, April 5th. We saw it come and tap into that zone. We still have it there. Broke up. Now it's breaking up again, and it's continuing its move up. So last down move for the up move. Price taps into here. This is 4-hour zone. Let's go ahead and put an alert here. We'll put demand, and we'll also go ahead and label this box as customary, right? And we'll say 4-hour accum. We'll move this back into here, right? So that's what we're ultimately looking for, that entire zone there. Now we look and we zoom in a bit, right? You have price coming down, right? Moves sideways, finally breaks up, and we say, well, what's the last unmitigated area when it broke this high right here, right? So just so we're crystal clear, right? We're starting to come back down now. So let's go ahead and remove that. And you see this mitigation of the open. It opens, comes up, mitigation. Candlesticks here, tweezers, boom, break up. So potentially something like this, right? Let's go ahead and zoom in and see what else we got. I like that 15 a bit more. Candle, boom, break up. We finally have a break. So let's go ahead and leave that 15-minute right there and see what happens. And we'll go ahead and label it with the idea that it's going to come into the 4-hour zone first, and then we want to see if it progressively goes down lower to this 15-hour, or excuse me, 15-minute zone. So we'll just go ahead and label this 15 S&D accumulation, boom, and we'll just leave it here, and we'll leave price like that. So that is actually going to conclude the video for today. I hope you learned something. I hope I broke this down in a way that was easily palatable. Go ahead and leave a comment. Give me some feedback on what you thought. And of course, as always, have a wonderful rest of your week, y'all. It's your boy B Phil. I'm out. Peace.